This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe Rabil with Invest Like a Pro. And today what I want to do to start off the new year, I want to make sure we get off on the right note and you have the right mentality because I want you to change the way you think. One of the things that I learned, I've worked with a lot of short-term traders and longer-term traders, and one thing that I've noticed, and certainly for me over the years, as I've traded over the past 30 to 35 years, one of the things that really has helped me is that I'm very, very selective. All right, and what I want you to start thinking is I want you to be kind of like a setup snob. I want you to be a snob. And let me just explain for a second. I've been talking to institutional money managers for 32 years now, and they constantly are telling me about phenomenal fundamental ideas. And the reality is that if I took every one of these ideas, I really wouldn't have, there's just so many that are coming through that I would just be constantly buying something almost every day, or at least, every week. And it would be the type of thing where I'm not really using my own analysis at that point. So what I have done, and I started doing, that dates back a long time, is when someone tells me what a great idea it is, I basically look at it like a snob. I'm like, okay, well, if this is so great, how come it doesn't meet these specific characteristics for me? Now, a lot of times what it ends up being is they're early. So if you like to read things on, these different websites that give fundamental ideas, that's great. I actually recommend that. But then what you want is to have a specific filter that says, okay, you know what? Now it's meeting my criteria. So you build up a watch list of stocks that have these fundamentals, and then if they show up meeting the characteristics that you have in your trading plan, then you can actually put it to work. For people that are subscribing to my research, I know a lot of guys, the way they do it is they have a list of fundamental ideas that they're looking at. And then once they start to show up on my reports, then they know they have kind of a match. They've got a fundamental idea that they're interested in based on some product or industry or whatever. And now all of a sudden the bigger picture technicals are starting to come through. I am going to be doing something specific on longer term wealth building on as a lesson for the stock talk, and it's related to these big cap names that everyone is interested in, the Teslas of the world, Apple, Amazon, all that stuff. These are coming down for the first time in a long time, and a lot of people are trying to kind of jump in, and I want to explain how I would look at those and why you should not feel the pressure to jump in those. Like I said, I'm a snob. When it comes to picking stocks, I am a total snob, and I'm okay with that. I'm going to sit back and say, you know what? Unless you meet what I'm looking for, I'm not going to buy you. It's just not going to happen. And if I miss it, I miss it. But it's going to be pretty rare where you don't get some opportunities. Most of the time stocks, even on a longer term standpoint, they're going to give you a couple of really great opportunities to get in before they make their big moves. So anyway, let me just give you a couple examples of what I'm talking about. So let's look at something like Schlumberger. Now, Schlumberger meets the criteria, generally speaking, here on the weekly chart. We got the pinch play with the nice little duck bill. ADX is good enough, right? It crossed above 25. It's not powerful, but certainly really good strength on the monthly time frame. And then we had this zero line reversal, low ADX. You could have done that based on the trend line break and everything, but you also could look at this and say, you know what? When I start looking at what's going on in energy had a really ugly week here. Look at XLE, and I can go through and you can look at stocks like COP and stuff like that really kind of gave it up. And some in the other oil areas, not just the big integrated guys, something like a PXD has actually broken its 18-week, right? And not to say that these are breaking down and that they're not going to work, but if I'm going to be a snob, right, I not only want to have a market environment that I like, and in this case, it's a little bit different because energy can go counter to the market. So it's not as useful to look at the S&P necessarily, because we know that the XLE and the energy can go up without the market. But if the sector itself is showing signs where it's kind of neutralized in the near term, maybe not as attractive, do I really want to go and put my hard-earned money to work in a sector that looks a little bit more questionable? Maybe not. So, like I said, if I'm going to be a snob about it, I probably wouldn't take this for the very reason that the group or industry, not the group, but the industry and the sector are looking a little iffy in the near term. Now, if that stabilizes and they look a little bit better, then I'll come right back to the sector. But I just want to give you a couple different examples of how you could be a snob. Look at ALSN. This is a great looking pattern. This bigger picture is starting to turn. We have a low ADX condition here. And it's trying to cup around. The 18-month is starting to turn the corner. As we make this move to the upside, we got green DI, but ADX really only got to 25. So again, if I'm being a snob, I'm saying, you know what, we only got back to this prior high. And now we're trying to come back and hold this support area, but ADX didn't make it above 25. I want a little bit more proof here. Now, if I'm just using this as a trading play off the daily, weekly daily, and I just want to make a move back up to this prior peak up here, then, that's a great trade, actually. It looks fine. But if I'm looking for this to actually emerge out of this area, I probably am going to be a little bit of a snob. I'm going to wait for this to show a little bit more strength here before I'm interested in buying something that I want to be in longer term. Look at something like PFGC. So PFGC is, to me, a little bit different than the ALSN. You see how when this made this move here, this recent move, look at the strength in the ADX. I mean, if I'm being a snob, this is one that I'm definitely interested in. This is a pretty amazing pattern. I'm not saying it's timely, and my subscribers know that. This is probably going to take a little bit more time. It's going to need to set up on the daily chart. If we get this a little bit closer to the 18-week, we get in our opposing trend, we got to look for one of our triggers. If you have that, then this is a stock that would definitely be an A+. So I like to categorize stocks as A+, A, B+, B, and then, a C or C+, something like that. I'm not looking at anything below that, right? So if I'm looking at these and I'm kind of categorizing them, I would probably say SLB probably fits into B or B+. It's not an A or A+ because of the group action. ALSN, I would probably throw in like the B or B+ category. Not to say there's anything wrong with it. Look, I've been putting this on my report. This is definitely one we want to keep an eye on, but I probably want a little bit more proof just because we're failing at this prior high on a longer term basis, and the drop has been a little bit sharper than I probably would like to see, and mainly because the ADX couldn't get above 25 on that move to the upside. So it's more like more like a B or B+ category. Right now, in a bear market, in the environment we're in, I'm looking for nothing but A or A+. It has to be an A or A+. Be a snob right now, picking stocks. You don't have to look. This is your money. You're not a. I've been working with money managers, as I've said, for 32 years. These guys have to be invested. They have to put money to work. They have to. They can only have like 10% cash. For you, this is a totally different situation. Until the market or an individual stock proves itself to you, and it gives you the confidence to say, you know what, this meets everything that I'm looking for, then I'm not going to do it. If it meets everything I'm looking for, then I will do it. Look at something like Amgen, just as another example. Really had a nice look to it as it was breaking out. We had this low ADX pattern, really good strength to the upside. And I'm sitting back and I was bringing, again, this was one that was in my report, and I'm saying, look, we want to watch this. And as I do the Wednesday videos for my subscribers, it gives them a little bit more detail on what I'm looking for, saying, look, we're looking for a pullback, but we want it to be orderly. I don't like this big ugly bar here. So I know now I probably want to give this a little bit more time. You see how the MACD is crossing over to the downside. So even if this triggers back on the daily chart, just based on what's taken place, I don't like this. This bothers me. So now I'm leaning more towards it doing something like that. If I miss it and it takes off, so be it. I am looking to increase my win rate and lower my loss rate. I want to take fewer losses. That's why I'm being a snob. I want to take fewer losses. In a bear market, that's how you want to be. Now, if this happens in a bull market, I'd probably still take it. All right, because the bias is to the upside, generally speaking. And if we get a trigger in a stock that meets the majority of the criteria, that's great. But I would say overall, when you're trading, whether it's a bull market or a bear market, if something does not meet your criteria, you don't do it. And really want to be focused on the higher time frame. All right, the higher time frame. With support from the upper time frame to tell you whether you really want to do a trade or not. Before you even look at the smaller time frame for entry, you got to make sure it meets all your criteria. If it does, great. And that includes two things: on the way up and on the way down, right? If this is kind of like a breakout trade, but it's coming in too hard, I think. And a MACD is confirming what I'm seeing in price, and it's telling me that we're probably not going to go straight up. We're probably going to pull one of these if it's going to work. I don't know. This could just fail here. I do know I'm interested in these because look at something like GILD. Look what that's doing. Look at BMRN. Look what that's doing. So this has the group action I'm looking for. So when I see that kind of thing, I get pretty interested. So when I look at how this is pulling back, I'm probably, a little hesitant, at least at the start. So I hope this makes sense. I hope this helps. And start being a snob. People are going to give you ideas all the time. You're going to read about them. You're going to talk to someone. And they're going to go, hey, I got this great idea for you. If they know you're interested in the market, you're going to be getting ideas all the time. And they might be saying, hey, I got some information not everyone knows, that kind of thing. Well, it's going to show up in the chart. Remember, the charts are showing the footprints of money. And those footprints are going to show up in the charts. So that's what I do. I am looking for footprints, and I want big footprints. I want to be following the big footprints of money. That's big money. And I don't want to be in front. I want to be in front of them as they're going in one direction. And I want to be out of the way if they're going in the opposite direction. Think that way. Be a snob, and I think your win rate will go way up. And mainly your loss rate will go down. That's how I want you to think about it. Take fewer losses. All right? Go ahead and post any questions or comments. See you next time.